Well, you would think with all of the information online that today's potential homebuyers would be more informed about the mortgage process than ever before. But that apparently is not the case. Diana Olick has the results of a new report.
After the foreclosure crisis a decade ago, mortgage lending tightened up and new regulations were put in place. But consumers today apparently think it's a lot harder to get a home loan than it really is. A growing number of consumers said they had seen their credit score recently thanks to a myriad of credit monitoring sites, but nearly half couldn't remember what the score was, according to a recent Fannie Mae survey. The survey also found that consumers either didn't know or overestimated the minimum credit score needed to qualify for a loan. Half of those asked were unsure, and a third thought it needed to be higher than 620, but the minimum is actually 550. Both current homeowners and renters were equally uninformed. Consumers also overestimated the required down payment. Most either didn't know or thought it had to be 10% or higher.
Maybe about 30%.
About 20%, I'm assuming. But no, I don't know the details. It's very overwhelming.
In reality, the FHA backs loans with a minimum down payment of 3.5%, and there are other programs through the U.S. Department of Agriculture and the Department of Veterans Affairs that offer zero down payment options. Consumers can qualify for a mortgage with as much as half their income going toward debt payments, but the majority of consumers said they didn't know what the level was, and most others said the limit was 40%. Fannie Mae's chief economist said it's impossible to know how many renters don't even consider buying because of these misperceptions, but he said it had to be some. For Nightly Business Report, I'm Diana Olick in Washington.